Okay, so if you have it, we want to look at, this is under topic 2, because there was another student who suggested we do property, plant and equipment. We call PPE. Called property, plant and equipment. So in application, we call it PPE. So these questions normally carry around 10 marks, 5 marks. So it normally range with the what? The intensity of the question. With the question imesetiwa, the marks yake inakuanga standalone. So for you to understand this topic of property, plant and equipment, you need to know how to do what? Depreciation. You need to know how to compute depreciation. So before even we look at the format, I want to know if you know how to compute depreciation. We have how many methods of computing depreciation?
2.
We have 2 methods of computing depreciation. The one you know 2. Which one and which one?
A straight line method and reducing
Yes,
balance.
we have straight line. That is one. And reducing, right?
Yes.
So there is another one which maybe now I can add you because you have contributed more. So there is another one called sum digit method.
Yes.
Yes. There's another one called sum digit method. So depreciation is a subtopic on its own. For now, you can compute depreciation, but it is not something hard. So you will see.
Yes.
It. Yeah. So PPE, basically what is a PPE is just the summary. So if someone asks you what is PPE, so PPE is a summary. It's a summary of what? A non-current assets.
Yeah.
The summary of non-current assets. And we know non-current assets, these are the asset that used by an organization with more than one year for them to get what is called economic what? Economic benefits. Economic benefit. So if you are using that asset for more than one financial year in a company,
yes,
it's non-current asset. And we have several types of non-current assets, like land. Another one we have what is called motor vehicle. Non-current asset.
Fixture and fittings.
Yes, we have fixtures and fitting. And the other one, Nigani.
You have written motor vehicle.
Yes, I have written motor vehicle MV.
We have equipment.
We have equipment, correct.
And building. Land and building.
Yes, land and building. And we have an plant and machinery.
Machinery.
So that makes the composition of property, plant and equipment. So when you reach a section 3 or intermediate level, you're doing a financial reporting, or not even financial reporting, even in section 1, company, on under the company accounts, you will need to report. So when reporting, we consolidate all these items under the property, plant and equipment. So let's have a format. So let's have a format for property, plant and equipment. Let's have a format. So you come up with on a color. So we'll start with details or particulars, and then we have land and building. And then we have motor vehicle.
Plant and machinery.
And then plant and machinery.
Stand fittings.
Furniture and fitting. And then we have the total, right?
Yes.
So, so the first thing we see is the balance. The balance.
Brought down.
Yes, brought down. So you will put them here. That is the balance brought down. What else do we do? And then you will put what you have acquired. That is acquisition.
Yes. Addition.
Yes, the one which you purchase, or you can call it acquisition.
Yes. And how about the gain on disposal?
Gain on disposal.
Do you add, or what do you do?
So gain on disposal, I will show you how we will toggle disposal on each part.
Yes. Okay.
So here, after acquisition, then you can, this is the one we have acquired. That is the one you have acquired. That you will see another one. If there is any,
yes.
you have acquired, if there is any disposal, if there is any disposal during the year,
yes,
you do what? You less. See, this one we have, we are disposing our assets.
Yes.
So that one, you less. All through. So you less that one. Once you have less that one, then you will look at, is there any revaluation? They want to revalue their value during the period. So unaweka revaluation. Sorry. So we might having just revaluation for one. Then we put the top, the total. Once you have the revaluation, huwezi kosa upate hiyo plan ama asset unataka kutransfer from one place to another. So kuna inaitwa nini transfer. If you are transferring a motor vehicle, we will be removing this motor vehicle and maybe we can put under asset. So the
asset.
Yes. So that at the end you will have the balance carried down.
Okay.
Maybe this one it is at 1st January. So this one will be at that first deck. So now you have the balancing figure here. The balancing figure. So that one makes the part, the first part in PPE format. Once you have, so sijui kama umeshaandika mpaka hapo. So this one, I want you name it A, and then this one you name it B. You name it A, the other one you name it B. So what we have done with that one, the next one down to here, we will look at a depreciation. we look at depreciation. So depreciation, again, we start with the balance. Balance product down. So what you have done with the balance down for depreciation, then we can see again depreciation charge. Depreciation charge.
We left the depreciation charge.
So we add this one. We add the depreciation charge. This one is only for 1 year. The one we charge for only one year.
1 year.
Yes, that's why we call it depreciation charge. So what? Then you put again here. Check depreciation charge, and then kuna accumulated depreciation for assets sold. Accumulated depreciation for assets sold. The one you've sold during the year, ndio tunaitoa hapo.
Yes.
Tunaiweka hapo. Okay. Ukishaweka accumulated depreciation for the asset which we have sold, and then tunaweza pata another one, depreciation which we eliminate due to revaluation. Maybe we have eliminated certain depreciation due to revaluation of asset. So again, you put it here. All the way to there. And then now we have now the balancing figure here. That one you call it so this one you call it C, and then the one here we got it here down, we call it D. So hiyo ni format ya PPE. So financial accounting, the main thing is to understand the concept. The second one is to have the format. If you want a format, this one you can do it in 5 minutes, then you go to another question. But you don't have the format, you will struggle. So it is good to understand the format and to understand the concept. So format. So our question inasoma je? That is November 2017. It says the following information relate to the non-current asset of Jirani Mwema Limited as at 1st October 2016. They have given us non-current asset, that is property, plant and equipment, office equipment, motor vehicle with the cost and accumulated depreciation. We have additional information. Number one, the following non-current assets were acquired during the year ended that 30th September 2017. Machinery,
yes,
and motor vehicle.
Motor vehicle.
Number two, the following non-current assets were disposed of during the year ended that 30th September 2017. So they've disposed machinery, office equipment, and motor vehicle with the respective date. Yes, with the respective date.
Okay.
Note number three, say Jirani Mwema Limited depreciate the asset using the straight line method.
The straight line method.
Yes, so you should be keen on the method of we are using to depreciate our assets. So the method here they have given us is what?
Pro rata basis.
It is a pro rata basis or a straight line basis. Then they have given us the rate of depreciation there. Then they need us to give the property, the movement of the asset with a 10 marks are free. Naweza kosa kupata hizo 10 marks are free. Hope umeshaandika format. So hizo ni 10 marks are free. Hizo ni 10 marks are free. Hizo ni 10 marks are free. So what you do, we start with working. Na nataka nikufundishe kama unafanya exam so that usoe. So ukifanya working, una open accounts are all the assets, ndio?
Assets. Yes.
We own property. When I open that account, we have another account there that is plant and machinery. Then we have another one, office equipment.
Office equipment.
So you open all of them. And then we have another one, motor vehicle. I will write it here. Motor vehicle account. Then, so we start with 1st October 2016, balance pro down ilikuwa ngapi? Balance pro down ya free or land ilikuwa ngapi? Tunaisoma tu hapo, tunatumia yes, tunatumia cost that
5,000.
That 5,000. The next one, plant and machinery, balance pro down ni ngapi?
We have 26 to 50.
26 to 50. Office equipment, balance pro down ni ngapi?
5,000 to 50.
5,000. And make sure you are noting the date because of our pro rata, right?
Yes.
So,
yes.
And then this one, 1st October, balance pro down ilikuwa ngapi?
15,750. 15,750.
Yes. So ukishamalizana na balance pro down, you don't even consider the accumulated depreciation there. So you just leave that accumulated depreciation, and then we go to additional information number 1, saying the following non-current assets were acquired during the year ended 30th September 2017. So to acquire nini? Machineries, ndio?
Yes, and
so it is on when?
It is on 1st October 2016.
So 1st October
2016.
2016. The date. So to spend cash. Account affected is cash yangapi?
3,500.
3,500. Good. And then the next one to kaga kuna April 2017, that is motor vehicle.
Motor vehicle.
April 2017. Tunakuwa na cash.
Yeah, 2,100. 2,100.
2,100.
You debit all of them.
See, what happened to when you increase an asset?
It increases.
Yes. So there is a rule in accounting. That's why we need to understand what is called debit and credit.
Yes.
Debit and credit. When an asset increases,
yes,
you debit. All assets, when increases, you debit. Either non-current asset or current asset, you debit. When you decrease an asset, you credit.
Yes.
When it comes to expense, an increase in expense, you debit. A decrease in expense, you credit.
You credit.
Liability, an increase in liability, you credit. A decrease in liability, you debit. The same case with capital. When the capital increases, you credit. When capital decreases, you debit. So those are the principles which you need to understand. So that tukidebit tukicredit hatushindwi ni gani. Then tukamalizana na note number 2. Twende note number 3. Note number 3 natuambia sorry 2.
We have left note number 2.
Oh. The following non-current assets were disposed of during the year ended 30th September 2017. Now,
2017.
we will reduce our assets. So to reduce assets, the credit. No.
Yes.
So we need to credit now the respective account. So to kuna machinery to be disposed at when?
1st October 2016.
Oh, let me squeeze my boat. To dispose machinery ya ngapi?
So I don't know. We have the sale proceeds, cost, and accumulated depreciation.
So all these account tumetengeneza hapa, tumetengeneza na cost. Tumetumia cost.
Yes.
Yes. So the one we are recognizing hapa tunatumia cost only. So make sure umetumia cost.
Yes.
Tutakuwa na cash. Cost ya ngapi?
3150 for the machinery.
Yes, 3150 for the machinery. And then,
yes.
So make
where
sure
do we place it now?
On credit.
On the credit side.
On the credit side, because we are reducing an asset.
Yes.
And then another one to dispose.
1st January 2017, office equipment 280.
Dispose office equipment 280. So again
280.
You can receive cash, you are 280 at 1st January 2017. Okay. The next one, Nigani.
The next one is 30th September 2017, motor vehicle at 1750.
Motor vehicle, tukaeka cash bado hapo 1750. So we have recorded that additional information. Then now we go to the next additional information. The next information, okay. So the last information that is note number 2 is about depreciation. So now you can close this whole account and get for me the balancing figures.
Yes.
Balance carried down here. Get balance carried down.
How about
what? Which one?
We have notes number 3 and 4, but all of them are for depreciation.
Depreciation,
so
yes.
Okay.
So I want first we deal with the. So ulikuwa umeangalia format yetu.
Yes.
Format yetu ilikuwa naanza na balance product, acquisition, disposal, evaluation. Sindio?
Yes.
That was ilikuwa the first part. That's why to compute that first part. And that part ya pili ilikuwa mambo na depreciation, sindio?
Yes.
Yes. So tutafungua tutaangalia depreciation account sasa hapo. Pick up. So get for me the balance carried down here, all of them. So what you do here, you add the one which is in a debit side, then you less which is in a credit side for you to get the balance carried down.
Carried down.
Yes, in all the accounts.
The one for Freehold property, we have 35,000.
35,000, yes.
And then plant and machinery, we have 26,600.
Plant and machinery, we have how many?
26,600.
26,600. 26,600. The other one?
The office and equipment, I have gotten 49,70.
Office and equipment,
49,70.
70. Then motor vehicle.
$16,100. 100.
100. So that's
yes.
So make sure you have umeandika hizo zote before we remove tuweke. So tutakuwa tunaitumia tu hizo account, tunaisoma tu sasa tu. Ukienda PPE,
Yes,
you only be feeding that PPE. There's no more computation. So umeandika zote?
Yes, nimeandika zote.
So ukishaandika then tunaweza toa, we start oh, just a minute. I touch my laptop. Okay, so shamaliza hiyo, naandika disposal account. So first, you need to have a disposal account.
Yes.
I show you how to open the disposal account. So disposal account, we record any asset which you have disposed and the accumulated depreciation for that asset. So here, we'll have all the one which you have disposed as we have the cash proceeds up utaweka hii side on credit side. Hii ni cash, is an asset. So una debit, una credit disposal account, una debit cash account. Ni asset may increase. So una debit that asset account, credit this one because it's an income. So umeuza kitu umepata pesa. So it's an income. So the first cash proceed tulikuwa tumeuza ya ngapi? Angalia note number 2.
Tumeuza plant and machinery.
Plant and machinery tuliuza at how much? The sales proceeds?
Plant and machinery at, wait a minute, at 3150.
At 31? No,
50.
that 150 was cost. I need sales proceed.
The sales proceed.
Yes.
Okay, it was 2415.
2450. Then that is the next one, cash proceed. tukauza gani tena?
It's 24.15.
24.50, right? Then tukauza gani tena?
15.
15.
24.15, yes.
Tukauza gani tena? Which one? This also.
Office and equipment at 224.
Office and equipment
at 224. $224. And then kuna ingine tumeuza or just that one alone? What else did we sell? Tuliuza hizo mbili peke yake? Kuna gani tena tuliuza? So tukauza motor vehicle. We sold a motor vehicle at what? Motor vehicle tuliuza motor vehicle na ngapi? Vile siku print my past paper, tuliuza motor vehicle na 1120. 1120. So these are plant and machinery tuliuza, ilikuwa na cost ya ngapi? Ilikuwa na cost ya 3150. So cost, debit cost ya 3150. That is for plant and machinery. Then for office, again for that plant and machinery ilikuwa na accumulated cost ya ngapi? So hapo ndio tunaweka accumulated depreciation. Ilikuwa na accumulated depreciation ya ngapi? Hapo tumepewa 350. And then tukauza another one, that is office equipment. Ilikuwa na cost ya ngapi? Office equipment we sold it at 280. And it has accumulated depreciation. Accumulated depreciation of 70. That motor vehicle, we sold it at a cost of 1750. Na ilikuwa na accumulated depreciation of 175. 175. Kwa na accumulated depreciation ya 175. Bado unafuata? So here, so you will compare either loss or profit. If the credit side is more than the debit side, then we have a loss. If the debit side is more than the credit side, then we have a profit. So you will compute for me and get the balancing figure, either loss or profit. Once you have done that, we can have working. We can have working for depreciation. We can have working for depreciation. We can have working for depreciation. So working in for depreciation, remember we have been told on a pro rata basis. So if you have been told on a pro rata basis, it means that you will depreciate an asset up to the date of disposal and up to the date of acquisition. So you only make sure that you are within the range of disposal and the range, the date of what? Acquisition. That's why they are calling out on a pro rata basis. So like the first one, ilikuwa gani? Plant and machinery. We can start with plant and machinery. You can start with plant and machinery. This plant to acquire on first, tulikuwa nazo on 1st October 2016. And then at the same time, on the 1st October 2016, we purchase another one, and then at the same time, we dispose another one. So here you will have the cost. I hope I had on my past paper. So you can see the cost of this freehold property. We don't depreciate that one. They have not given us the rate of depreciation. They have given us on down there. They say so that one will come it later. So let's deal with the plant and machinery. We have the cost at the date of acquisition. That is the 1st October 2016. Ilikuwa 26,250. Remember that one was the 1st October 2016. At the same time, we purchase another one costing that 500. So we add, and then at the same time, we dispose another one. We dispose another one with the cost of what? 31,150. That one was the same date. That is the 1st October 2016. So this one, we will use this asset. So we will depreciate for the last 12 months, because we tumefanya acquisition and disposal at the beginning of the period. So meaning the remaining balances here will what? Will stay for the last 12 months. So we just directly multiply by the rate 20% and get that value of what? Depreciation. So I don't have my calculator here. So kishamaliza hiyo, tunakuja, the next one is office equipment. Office equipment, tunaangalia the date of acquisition again. Balance product ya office equipment ilikuwa 5250. That was on the first date. Then to stay for how long before we purchase or we dispose? Note number one, we didn't purchase office equipment, but we dispose office equipment on 1st January 2017. So from October, November, December. So we stay for 3 months before we dispose a machine on 1st January 2017. Unaangalia hapo ni 1st January, see that 1st January. So we stay for this machine for 3 months before we dispose. So upon it, I calculate na 3/12 times the rate of depreciation ilikuwa ngapi? The rate of depreciation of office equipment is 15%. I get the value of depreciation. Then after that, did we purchase? We didn't purchase. So after that, tumebaki na balance ya ngapi ya motor vehicle? No. So after 1st January is when we what? Fully dispose. So utakuja sasa, you take 250 minus the cost of the cost for the one we dispose, that is 280. I think it is 280 for this equipment. Yes, 280. And then, so from 1st January 2017 to our closing period, that 30th September 2017, this machine or office equipment will stay for how long? That is basically 9 months. You see this one, 3 months. For us to get 12 months, we are remaining with 9 months over 12 times 15%. That's what is now called the pro rata basis. We are depreciating based on pro rata basis. We go to the next asset, motor vehicle. I hope you're following. Motor vehicle, tulikuwa na balance product ya ngapi? Na tumedispose when? So unaangalia the date of disposal and the date of acquisition. So una depreciate mpaka date of disposal and acquisition. So if you look at a motor vehicle, tulikuwa na balance product ya 1770. Hiyo popo inaonekana, so let me put it this side. Hilo disposal account umeandika?
Yes, I'm writing it.
So tumekuwa na 15,750. Tukastay now for how long? Tukadispose on 1st April 2017. Tukafanya disposal on 1st April 2017. So from 1st October 2016 to 1st April 2016 is how many? 2017 is how many months? So mpaka January is 3 months. And then to add another, it is what? 1st April. Then to add another 3 months. So we stay for 6 months before we do what? We acquire another motor vehicle. So this one I will take it 6/12 times the rate of depreciation. They have given us the rate of depreciation to be what? 25%. And then the remaining one, then another one, 750. Then now we add another one to the one we acquired on 1st April. That is 2100. 2100. Did we dispose? Yes, we dispose another one. So let's get it first up to the date of disposal. This one, so unahesabu from 1st April mpaka 30th September 2017. So it means it will stay for another 6 months. So that one for disposal will not affect depreciation because ilikuwa disposed at the closing period. So that one will not affect depreciation. So you get the value of depreciation. That there's another one, freehold. Freehold don't have any disposal and any acquisition. So you just take the value, the cost, that is that 500, at 5,000, sorry, times the rate of depreciation they have given us down there. That is 2.5. Then you get the value. So that is the working. That is the working. That is the working. So make sure you list for me depreciation. Ukipata E, you add the 2. The same case with Botafogo, if you get the 1, you add the 2. So that at the end, we get depreciation charge. This one, we are computing depreciation charge. Depreciation charge.
I have gotten 4690.
So umeandika hizo values za depreciation zote?
Yes, for plant and machinery.
So have you copied this one?
Yes, I have copied. I have started with the plant and machinery.
Your sound is too low. So let me check for this depreciation so that.
I have a question.
Yes.
At the office and equipment.
At the office and equipment.
Yes, we are finding the depreciation. We have 5250 times the months now.
Yes.
And the percentage. Now I'm getting a decimal, and then right below it you have also, I think you have also written the disposal. Should I add or what should I do?
Disposal. So I'm checking with my voice. I don't know what happened. You said when having disposal or motor vehicle, should you add or less?
No, I'm saying at the office and equipment, we have calculated the depreciation, and
yes, they have calculated. Yes.
The disposal.
The disposal.
After finding, should I add the two of them to find the amount for the depreciation?
Yes. After for plant, because it is the two, so we calculate up to the first 3 months, and then we calculate for the rest of the 9 months. Then we combine the two, so that we get depreciation for the 12 months. Is that clear?
Yes, clear.
Yes. So compute The first one ya kwanza umepata ngapi?
Nimepata 4690.
46?
90.
90.
Yes. Have you gotten the same?
Me, I don't have a calculator. So I'm waiting for your values. So the first one is 46, 90. Obviously, when you combine the two.
I am getting 5409.076.
54,090.
0 point.
So you can even assume the point motor vehicle.
Okay. I've not yet calculated. You can read for me the values of motor vehicle.
Yes.
I'm not able to see them. Could you read for me the values of motor vehicle?
So this one is 15,750 times 6, that is 0.5 times 25%. How much are we getting?
Let me excuse myself for a minute.
So when you take 17,750 times 0.5, because when you say that is 0.5 times 2.5, the first one is 1968.75. The next one will take 750 plus 2100 times 0.5 times 2.5. I'm getting 16,012.5. 012.5. So this one, so when I combine the two, 1968.75 plus 16,012.5 nakuja 17,981.25, and then free all, that is that 5,000 times 2.5. This one is 875. So that one we have now, depreciation charge for the all assets. So now we can now go at it now and prepare our PPE, property, plant and equipment. Property, plant and equipment. So we can't have our PPE